Hello, welcome to another year's Futures Trading. Today is Wednesday, March 29th. It is 7:28 a.m. It's a bit early today. I'm coming today because I won't be able to be um, streaming today in the morning, not in the afternoon. But I want to point out something that has happened in this market, and it happens when it happens. This kind of movements, the one that we're having now, can be really sharp. Um, this is a classical bill trap. Where shorts were trapped yesterday, and now it seems that this is going to be. I mean, they're being squeezed now. This is going to be painful. Um, to have context, to put things in context, um, let me show you what I have from homework. Remember, always have to do homework. Okay, every single day. I do that every day. If I don't do my homework, I don't dare to do anything. You know, we got the market that was trending. It is trending almost 1 year. Not my bad, not really. It's trading in range. Almost 1 year trading in range here. This is the monthly time frame. Not change in the monthly time frame relative to yesterday. We're trading a range, a breakout here. This breakout failure has a potential destination on the 3,704. Down here is still going there. Has this breakout failure has taken the previous bar low out. The next the next one could be this one. Right? So no change in that. The weekly, I have we were talking yesterday about how this trend line is right. It's quite evident, right? And this is perfect. It's just an observation. I don't trade that, but I cannot not see this. We're talking about this thing, same thing. No change. This bar. It is too early in the day, in the weekly. We have an inside bar, but it's still too early to say that this is going to be an inside bar. Um, we have balance, another balance here. Look at this 1, 2, 3, 4, 5, 6 week balance, and then balance inside balance. Inside bars are a form of balance. You can see the range is contracting here. It's contracting. The range here is becoming shorter and shorter. The same goes in the weekly. You can see it in the weekly as well. And there could be a resolution soon out of this range. The weekly time frame is tightening. Now in the daily, the market has formed a 6 day balance. 1, 2, 3, 4, 5, 6 day balance range. And this trading between moving average. We had was bought from 100 SMA, sold here from the 50 SMA. See 50. So none of these ones are secure, right? The market can't take any of these ones. But and this is why has to be, we have to remain as neutral as possible. We can have plenty of scenarios in our minds, but remain as neutral as possible because there's a lot of uncertainty in these markets. And also, as you can see, all the time frames now are in a range, in some form or other, trading in range. And notice, you can see here, right? You pick any, pick the monthly, the weekly, or the daily. The monthly, if any, inside the range there was a trend to the upside. The daily, I mean the weekly as well, you can see trading market is higher. Actually, you can see it's going to the upside. It's going to the upside here. You can also play another trend line here. all the way up to here, and this is a breakout to the downside that's failed. Okay, but and the daily, particularly daily, after all of this talk and negativity, the market is breaking, the market is collapsing, the economy is going to hell, and the apocalypse is here. Look what the market is. This is low, and market is way up high here. So pay attention to what the market does, and not what the old people is doing. All people talking on the news, on trading rows. A trader don't want to know what other trader is thinking. If you're a good trader, you don't want to know what other trader is thinking. You need to think for yourself. You might talk, you might understand what other people is thinking and why, but it's really it's a must. We not must be let the outside influence our way of thinking. It is very hard because at the same time we need to know what people is thinking, what the state is thinking, so we don't trade in a bubble. We can see the range here in the market profile. 1, 2, 3, 4, 5, 6 week range here. We have another range here on the lower side, and there was another one on the upper side as well. I guess it's 12-day range on the upper side, another 8-day range on the lower side, and now we have 6-day range. We have a range. The range high is this one, range high is this one. The low of the range is quite weak. We have non-excess here, poor low here, mechanical buy here, so weak level here. This because this one was bought exactly from, I guess, was an overnight low or something like that, right? But doesn't mean the market is going to trade this way. Okay. The only observation yesterday I have is the market repair this poor low here, but has left another low here. Yesterday was very boring. We were talking about how we should stay in front of the market, in front of the desk, because opportunities will appear. Nobody tells you when an opportunity is going to appear. And the market there was nothing to do here for me yesterday until suddenly just something happened here. And what happened has a lot to do with what happened the previous day. We have this big break here. It was long, all these longs here. You can see the market was getting too long, and then liquidation of these longs. And the overnight trade sideways, prominent POC, was I guess it was 100% long. And yesterday the market followed the direction of the late trade from Monday. You could see here, we were talking about where this POC was going to close. Was going to close up here, was going to close down here, because it could be on any side, because this, how you can see how wide it is. It is only 9 periods wide, one more than this. We have excess on the upper side, no excess in the lower side. And also the action to the downside has not been completed here. But in this case, the difference in this case here, this one versus this one, is that you could see the traders were expecting something like, some kind of break, the same kind of break that happened the previous day. Everything was setting up, you couldn't see that until very late in the session, right? When market was here and started to come back here, boom. Where this market is going to break. But the difference is, the market was too long here. Market was too long here. There was a lot of long inventory, mechanical, every break was being bought. and then was liquidated. Now the opposite happened here. Rallies were being sold. But look at where this rally came from. The high of the day was half back, overnight half back. The rally high. I mean, look where this was exactly from previous period here. Then from saddle, then again from saddle, then from previous period half back, then for the 4,000. And the market, you could expect something here, right? Until this rally, nothing was clear. But the market showed his hand when they have with this market couldn't reach the 100 or the February low. You have a short covering rally. Once you have this, it is shorts was toasted here. Because you could see that short traders were shorting the market, expecting another liquidation here. But the difference, the very, very notable difference, that most people don't understand that this was a short. This was long. I mean, this was a market that was getting too short. There was a lot of short inventory in this market, and now, all the shorts that have not covered yesterday are very well underwater. They're being squeezed. A lot of people, there's going to be, this is a quite significant gap here, 40 points. Quite significant gaps here. It is, I'm not going to say nothing here, but the bigger the gap, the harder it's going to be, the less likely to be filled. That's one thing. If this gap is filled, this is not a strong market. Okay, having this low here tells you this this is not a strong market. Right? The market will come back to repel this poor low here. Now we have this weak low here. Was sold from its overnight high. Very close to this one. We have excess here. This high here, the next one, is the weekly high. But now, again, this market was too short. Shorts are being squeezed now. There's going to be a lot of margin calls at the opening. How you cover a margin call if you're short? You buy, right? You buy. Buying here, that's got and that kind of buying can generate momentum to the upside. But as I say, the most important thing to me right now, this market is super long, 100% long inventory. And look how the overnight trade has been made. Look at this. Every single break was bought here. Half back. 1, 2, 3, 4, 5 periods. At the same low. Half back. One tick. Half back. My God, can you see who is doing this trade? Can you see? I hope you can see what's happening here. How weak, this market, this overnight inventory is. Now again selling from this level here. Selling from this level here, buying again, multiple lows. Notice how elongated this inventory is. And somehow we have 1, 2, 3, or maybe 4, maybe even 4 distributions here. It's very emotional buying here, shorts, and this is a short squeeze. These shorts are being squeezed. Not just these ones, but these ones as well. The one from this day. Okay. These kind of days can give us good opportunities. Not that they will, but they can. The first thing that I will see here is the market. If the market makes an attempt to close the gap, the bigger the gap, the harder is for the market to be closed. If the gap is going to fill, usually the selling happens right away after the opening. Right away. As soon as the market opens, these weak levels will be repaired. This one, this one, this one. In the upper side, we have the 100 moving average of the new contract. Have this weak level here and the weekly high. The low, the lower side. This is poor low here. Weak level, weak level. There are the 200 moving average down here. The base of the rally, the base of the on this rally is on the 200. Weekly, weak low. Now you got the same. This week, this low was weak. This low is weak as well. Remember this, no? Remember these things. This is a poor low as well. There's no excess here. Action was not completed here. Weak low here, poor low. But markets take care of this. The first thing the market do, we need to understand what the market is taking care of right now. Every single time. Not the market won't know what the market will do, or it is important to have the scenarios of what the market can do. But we don't worry. I don't worry about what the market will do. I try to be focused. I try to be seeing and understand what the market is doing now. What's the current business? Market will have to take care of current business first. Current business here is short cover. What else we have? We have long inventory. That it is going to be the next thing. I don't know. What else we have? We have this poor low, this weak low, this non-access low. Is it going to be next? I don't know. We have a weak higher here. We have good access here. So, but what is the next thing? What can be the next thing? Is I have to be aware as well of what happened before, not because what will happen, it will happen again. Like for example, yesterday we have a long liquidation here, and traders thought the way today we're going to have. Yesterday, and this was Monday, yesterday Tuesday, and we're going to have the same thing again. I have to be aware. We need to be aware of what happened before. Not because it will happen again, it can impact in what is happening, what may happen, on what is happening now at this moment in time. That's the relevance of what happened in the past, because a lot of things that are going on right now in this market has a lot to do with what happened before. I wanted to leave that. At least that, unfortunately, because unfortunately I won't be able to be here. I have some things to do today. I hope you have seen this opportunity yesterday. That's what I try to. I don't call trades here. I don't call trades. I do this as part of my homework. I'm trying to teach to whoever wants to learn that this is about market understanding. We must have an understanding of the market first, then self-understanding before trying to do anything here. After we have market understanding, self-understanding, we start to create our strategy. And if I keep calling if I follow somebody just because that somebody is calling trades, I won't learn anything. I won't learn nothing there, and it's a very risky thing to do. Now another thing here, this kind of events what happened today happen all the time, but it doesn't happen often. Right? We may have this may very well be the market setting up for PCE on Friday. Right? Remember, we have all these things going on. What may happen in the future? Markets are always forward looking, always looking to the next, what's the next shiny thing. Right? Now, let's take a look. Look what the bond market is doing. You know, this is very, I do, and there's a lot of risk in this market. Okay, there's a range here. It looks like short covering. Looks like short covering. Break out to the upside, fail. The fail targets the lower side. Crude is rising, dollar is not moving, and we have a big gap. We have a big gap. You know, I was surprised how huge this gap was on gold. You know, this was incredible here in the overnight. Huge gap here to the upside. You know? A lot of things, a lot of this I think has to do with this high here, made in the overnight. I think the market is coming back to take this high out. I am these crypto things, this Bitcoin or whatever. I think if there were not, you know, that's a good thing for 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 banks as central banks. This is my personal opinion about Bitcoin, on all these crazy things that are going on. If Bitcoin would have not been in the market the way it did, I guess gold would have risen tremendously in price in the last couple of years. The thing with gold is when it rises, it never comes back because it's tied with to inflation, right? But that's just this. Take whatever I say here with a grain of salt. That's just a personal opinion. I happen to be on the side of Warren Buffett about when I think about Bitcoin. I think it has no value at all. But it is here. I think it's here to stay because there's a lot of people all over the world that is trading or is aware of that thing. But I don't care. I don't think nothing. And something else here is yesterday's volume was low, very low. Can you see the market? How the market was going lower. Volume was lower. Every time was low. Lower volume. Yeah. This upside movement, in this case, going to the downside was not being backed up by volume. All right. I don't. What else can I add here? Okay, if the market has this, market can take maybe this highs out, make a new high here, which targets this high. Look how we don't have excess here. There's pull high here as well. Pull high, you got one, two, three pull highs in the upper side. Okay. And quite short traders have forgot about this no non-excess highs, right? Back to back, every single highs has non-excess here. And remember, this is the ES is an index. It's an index of 500 companies. Alright. I hope this helps. When I come back, I guess in the evening, I will do a review. I will post a market update in the evening today. I will take this chance to do a replay of yesterday. And probably today as well. When I away from my from the trading desk, I do replay the days because I want to see what happened. It is one thing seeing the market here, just a static market, and another thing seeing how this happens, how this has happened. It's way more important, more relevant than just having a static picture or static view of the market. Okay, I wish you guys a good luck, a good day today. Stay safe. See you tomorrow. Bye bye.